basis to or slightly more than 8,500 crores, which is the highest ever for a quarter. Help us understand how sustainable is this momentum, and are you on track to meet your FY26 booking guidance of 32,500 crore rupees?
We had a series of some very extraordinary launches that we were planning in quarter two, and fortunately, all of those more or less hit the market. Is why we had a sort of an exceptional Q2, and it was largely driven by some launches which were blockbuster. Like in Hyderabad, we launched a project by the name of Godrej Regal Pavilion. It's an acquisition we did, a second acquisition we did in a Hyderabad entry strategy, and we sold about close to 1,500 plus crores in the previous quarter. And again, we had a holistic performance. We had a project called Godrej MSR City in Bangalore, which was launched in Q1, but we saw stupendous sales, continued sales in Q2 to more than 1,000 plus crores in Q2, making the cumulative YTD sales at about 3,500 crores thereabout. So I think it's backed by some very good launches, and similarly we had launch of Godrej Sora in Gurgaon, which sold more than 600 odd crores. We had a project in Versova, which we just acquired early in this financial year, which did about 480 odd crores. And then again, we had a plotted launch in Indore, our first plotted development in a new city of Indore. As per RERA count, there is some mechanism which you can only launch a particular set of inventory, and whatever we were allowed to launch, we sold that out, which is about 410 odd crores. Now coming to the second nuance of your question, which is how much we see this growth momentum getting sustained. We have a fantastic launch pipeline. Usually our H2 are stronger than H1. So we have a series of launches across all geographies that we operate. So yeah, I'm quite confident this momentum will continue and would likely strengthen further.
Right. And you've already achieved nearly 47% of your FY26 launch guidance and 81% of your business development target. Could this then lead to an upward revision in your full year guidance as well?
As a process, we don't up the guidance, but if I were to give you a sense that do we feel, basis current visibility, our confidence on beating the guidance, that seems to be very, very high. So yes, without even changing the guidance, I can say yes, we would hit and exceed both the sales, in terms of outcomes as well as business development guidance. As you rightly said, we've done about 81% of BD guidance, which is about close to 16,250 crores worth of lock-in of revenue we've done through fresh acquisitions, and in all likelihood in the next 2 to 3 months we would all probability cross the business development guidance. And sales, when we started the year, we were very conservative in terms of giving guidance, and usually our H1 is typically about 35 to 40% of the full year. To our surprise, we've already done 47% or thereabouts of the annual guidance. So yes, looking forward to beating that as well.
Okay, so sounding optimistic there, Mr. Pandey. Let's talk about your recent new forays. You've made significant forays into new cities like Hyderabad, Raipur and Vadodara, to name a few. How do these new markets fit into your long-term growth strategy, and what kind of contribution are you expecting from them in the future?
There are two sets of buckets of projects we have. One is largely a group housing acquisition, which is typically apartments and even villas for that matter that we do. These are largely concentrated in core markets, which is like NCR, Mumbai, Pune, Bangalore, Hyderabad. Whereas in plotted developments, we do acquire projects in cities outside them because the construction intensity and management bandwidth is not very high, and these are relatively quicker turnaround projects. So these are projects like Indore, Raipur, Vadodara, Panipat. We've done a really recent acquisition, Panipat now. So these all projects operate on a slightly different operating parameter. Now coming in terms of how we see these movement of launches, I think pretty much on track. We should hopefully, as a positive surprise, in all probability, we'll do a Bangalore Dod Badapur launch within this quarter in all probability. We're pushing even Panipat to hit likely this quarter or next quarter, but good chance we'll hit it within this quarter. Then we have a Baroda launch coming up, again probable to push it within the quarter or early next quarter. And Raipur in all probability will be a quarter 4 launch. These are the plotted set of developments. And in the group housing, yes, pretty much on track on the launch pipeline.
Right. And you recently received the RERA approval also for phase 1 of Godrej Trilogy in Worli, right? With a total revenue potential of about almost 10,000 crore rupees. Could you share the expected launch timeline, and how do you plan to phase the project execution?
The project we are super excited about. This is like the magnum opus, as they say. a lot of hard work has done to sort of create something truly extraordinary and a very unique product, which has three towers, which is why the name Godrej Trilogy. We will be launching first two towers, only a portion of that inventory. These two towers are called as Seafront and Sea Turf. And we'll hold some inventory, like in one of the towers, we'll hold a few floors, and in another tower, we hold some specific views and release most of other set of inventory. We've got the RERA, as you rightly said, and we are about to begin the marketing activities. I would say in Bombay, this is going to be a landmark, especially in South Bombay market. It is going to be a very unique product. It has a 10,000 crore top line and a huge upside potential from a brand perspective. So we want to sort of ripen the price appreciation story for ourselves and create profit expansion through that. So fingers crossed, this should hit the market within this quarter, and quite excited about that.
Okay, so that sounds exciting. And lastly, Mr. Pandey, you've acquired over 130 acres across multiple cities in Q2 in terms of your land plots. If you could give us a sense on how are you balancing aggressive land buying with margin and cash flow discipline, especially when the land market is extremely competitive right now?
Essentially, if you see, acres is also a function of plotted development. So we did a close to 4 acquisitions in previous quarter, and one of which was a group housing project in Hyderabad in Kokatapalli, which is going to give us a very strong top line. But the other set of 3 acquisitions that we did were largely plotted, which is a higher PAT and relatively lower booking value and very quick turnaround. So they don't really push you both on the capital side much as well as on execution bandwidth. So that's one. The second, I think having some guardrails, this is very, very important, this business, to define your strategy in terms of how you want to acquire, where you want to acquire, what are your return thresholds, and what are your upper ceiling limits, and these are more self-imposed than anything. So if you look at a net gearing ratio, we're one of the best in this industry, which is 0.3. We've maintained that, we would go up to the extent of net debt of close to 10,000 crores. So leaves us a huge headroom to acquire even more projects. And even then, we would be just around 0.5. So yeah, I mean, having a very strong set of guardrails and strong discipline investing, and backed by a very, very strong execution engine that we built over last 2 decades, is what keeps us going and doing it well.
Right. Great to have you then on the show. Thank you so much today for your time, Gaurav. Good speaking with you.